Hello there. My name is Dennis Stephen. Thanks for joining my channel. Today we're going to talk about AML regulatory reporting. We're going to look at three different types of report. The first one is the currency transaction report, which is called CTR. Second one is STR, suspicious transaction report, and the third one is suspicious activity report, which is called SIRs. Before we can touch upon all these three reports, we're going to look at the AML lifecycle and where does these reports fit in. When we talk about AML end-to-end lifecycle, there are different stages there. The first one is the customer onboarding, where customer information are gathered, namely the name, address, and other things are gathered. And as part of customer due diligence, the risk profile of the customer is determined, along with sanction screening and other types of screenings are done. And there will be ongoing monitoring, transaction monitoring would be carried out, and also screening, which would be batch screening on a weekly basis, would be done. And any alerts that are being generated as part of ongoing monitoring will be dispositioned in a stage called case management. These are investigation done on the alerts which are being generated through transaction monitoring and screening updates. And accordingly, the risk profile of the customer would be adjusted, and there will be other stages in the workflow where this has to be dispositioned by different players in the KYC flow. The last stage, in certain cases, we would report these transactions to external regulators. And that's where these three different types of forms will come into picture. CTR, which stands for Currency Transaction Report, these are reports that needs to be filed for large cash transaction, both for deposits and withdrawal, and the threshold is 10,000 US dollars. These are large cash transactions. STR is suspicious transaction report. This is filed when there is suspicion arises for a transaction for fake invoices, unexplained fund transfer, and structuring of amount below the threshold for a CTR. You would file what we call as the STR. This is the terminology which has been used globally. The next report is the SARS report, which stands for suspicious activity report. Irrespective of if the transaction has happened or not, you would report or file an SAR. In the US, both STR and SAR are filed through what we call as the SARS. This includes both if a transaction happened or if it has not happened, you would file what you call as a SAR. There are provisions for it. And where do we file these reports in the US? In the federal agency, there are different agency, and FinCEN is the agency which comes under Treasury Department. FinCEN stands for Financial Crime Enforcement Network, is to safeguard the financial system from money laundering activities. This organization is also in charge of regulation. You might be knowing it, which is the Banking Secrecy Act and the US Patriotic Act. Under the same organization, what we call as the FIU, Financial Intelligence Unit, which basically reviews these reports which are filed. And there are two sets of report form which you have from the FinCEN website. For CTR, it is Form 112, and for SR, which is Form 111. The instruction and the form details can be downloaded through FinCEN website. All the instructions are available, and it also has provision to e-file these reports in their website. When we talk about currency transaction report form 112, there are three different types, three different sections. Part 1 is person involved in the transactions with name, occupation and address. Part 2, we would fill out amount and type of transaction, and part 3 would be the transaction location. This has to be filed within 15 days of the transaction date, and a copy of the transaction needs to be retained for a period of 5 years. The SAR form, which is form 111, has 5 sections. Part 1 is the subject involved in the suspicious activity. Part 2 is the suspicious activity information, the amount involved in this report. Part 3, which is basically the financial institution involved in the suspicious activity. Part 4 is the filing institution contact information, name, address, and things like that. And part 5, which would be a narrative description of the circumstances leading to the suspicious activity. This report has to be filed within 30 calendar days from the transaction date, and a copy of the transaction need to be retained for a period of 5 years. Now, all these information we can get it from the FinCEN website or FFIEC website regarding the instruction how to file it, and other details can be found in their website. Thank you.